Okay, good afternoon, ladies and gentlemen. I hope you're doing well. Welcome to this afternoon's market report breakdown and weekly preview session. Hope you're doing well. Good afternoon, Tony Tone. Good to see you. And good afternoon to everybody out there on YouTube as well. Hope you're doing well this week, team, as we embark on yet another 5 days of trading extravaganza, or so we hope. We don't have a great deal this week going on in terms of economic fallout from any particular events. There's a couple of bits that we will cover shortly, but eyes are all on the geopolitical backdrop as always. And no, I'm not talking for once about the oil events and the energy markets. I'm actually talking about trade talks between Trump and the president of China. Which at the moment isn't actually going anywhere, but the markets are, as ever, extremely reactive to anything that is happening between those two, as it can have such a massive effect on global markets due to the, obviously, imports and exports of Chinese goods and services. So we have got that going on in the background. Last week we saw an immense rally in the stock markets, US markets, as a result of that, and it did drag the European stocks with it. And of course we then had the corrective thereafter when everybody realized that amongst all of the words and at the end of the day nothing at all actually changed. There wasn't any progress at all that was made between the talks between Trump and Jinping, or however you pronounce the guy's name. So yeah, there is that. And that's where we're basically at. So this week is going to be heavily reliant upon technical analysis, but there are things happening, regardless of the fact that we don't have any major economic drivers at this stage. We do have the markets reaching some pretty big key levels of liquidity, premiums and discounts all over the place. And I've come up with what I believe to be a pretty well-rounded group of trading assets for everybody to sink their teeth into this week. I'm not entirely sure if they will be completed by week's end, but I think based on the fact we get some decent entries and looking at where the markets are currently trading, we've got a couple of decent discount zones right in front of us, as you can see there in the UK FTSE and the NZDCAD. I think it could be okay. I think it could turn out to be all right. So let's get cracking on then. So first of all, the UK FTSE, which as you can see is trading down at the discount at the moment. We have been trading in quite a broad range with this UK FTSE chart, and I don't believe we are looking at any sort of further bearish continuation here based on the knee-jerk reactions that we have seen from commercial buying interest down at this level. Once we got the big commercial sell-off, we had the big commercial buyback when we came down to it at this day, on this day here. We got this big commercial push up to the upside. This one was a little bit slower, I suppose, but then we got the big commercial sell-off, and then we've had the big hammer candle, which is commercials pushing down, and then quick rejection from the lows, trapping in the retail shorts. And this is usually a telltale sign that we are indeed going to follow up with a nice series of bullish candles thereafter. Now, I don't usually pay much attention to candlestick patterns, as everybody knows by now, but on the daily time frame, I will consider them, because on the daily, it's a little bit more convincing. Let's put it that way. So that's the UK FTSE, long back up to the previous highs, and we will of course discuss the exact entries and stuff like that in the day-to-day streams. Next up on the Forex front, we've got the NZDCAD. Really nice fresh trend in the NZDCAD at the moment. We've just been in this one for maybe a couple of months. It's looking really nice. We've got some excellent consistency on the upper limits and the lower limits of the trend as well. We've just recently been up to the upper limit. Nice big commercial sell-off with trend. We've come down to this point of liquidity, and we've also got a bit of a hammer candle forming down here. So what I've done is I've given two possible outcomes. My preference is to see the lower limit achieved first. So that would be for the market to actually contract, come back down, hit the lower limit of the trend, and then continue from that point on. But if it doesn't, we do need to be prepared for that one as well. And there is a possible and plausible entry via the breaker structure just above where price is trading at the moment to continue the rally back up to the trend's median, which is right in there. That's exactly where the arrow goes to. So we will cover that one as well. Moving down into NG, I've got the chart actually opened at the moment. Natural gas finally gone for the big breakout of structure, looking really good at the moment. The problem is, ladies and gents, that the damn thing did take off over the weekend. So closed on Friday, basically just about to break structure, and then it opened up over the weekend with a big gap up, and it's been trading bullish ever since. So by the time we got to our charts this morning at a reasonable hour, we were already trading plus 3.0, which is a little bit of a shame because that's much too significant of a level for us to jump into. So what we're going to have to really hope for, unfortunately, and I don't like using the H word, but what we are going to have to hope for is that the market comes back down for a daily retest of liquidity before it gets the second leg, which is really the ideal for us, because at this point we may run the risk of having to essentially scalp the top. I would say, maybe look at jumping in after a break of structure of 3.8 maybe, or 3.08 for example, and then ride the rest of the run back up to around 316, 318, which we will of course cover in the chart in a moment. I know you can't actually see the chart there, but yeah, that's what I would be looking at. And then finally into our precious metal of the week, I am looking at silver again. It just looks so much nicer than gold at the moment in terms of a structural point. And we've come down to the lower limit here. Really nice rejection. Last week's call was absolutely spot on silver. And so I'm looking to follow with the wind and look to get the buyback via the breaker structure back up to kind of this anchor point here. Not all the way at the previous highs. I think that was a really good call. I don't think the market's going to go all the way back up to the previous highs just yet. But I do think this week, realistically, we could see this anchor point, which would be a really nice trade for us, and it is sticking to that ascending level very, very nicely. So next up, market challenges. As I've already alluded to, we don't really have a great deal in terms of the MC this week. EU CPI is coming out at a 2 out of 10, and we do have the FOMC minutes, which is the highlight event of the week, although that's not something that you would historically look to trade. Good afternoon, Coratim. So yeah, that's not something you would historically look to trade in real time, but it's definitely worth a review. And the algorithm is registering it as an 8 out of 10 this week in terms of market impact and to some of our positions. So we have to take that with a level of seriousness in consideration. And the day after the FOMC, after I've had a time to digest it and get all the facts in check, get all the ducks in a row, I will be providing a full written analysis of that for you guys and posting that out in the chat so that you guys can dig into it and see if there's anything of interest. Moving down into the SSV this week, we had a 1% increase in the VIX volatility index. Still volatility looking pretty weak at the moment though. Other news, silver is completely flatlined. We've got NZDCAD at 52. The only notable call-outs really this week, UK FTSE at 54.12%, which is about maybe 0.8% over the marginal difference. So it could be really, really sort of alluding to the fact that we've got a lot of bullish momentum coming through. And then we've got natural gas, which is at 56.16%. So a hell of a lot of commercial money flowing into that one now. So yeah, definitely worth monitoring. Again, really would like to see the pullback first, but beggars can't be choosers. We've got to deal with what the market wants to give us. If it's going to be a case where we have to scalp the top, then that is what we'll do. So breaking down into the second page of the report, the economic and order book impacts stage. Again, not too much to say on the economic impact scale this week. FOMC exactly the same. We've got an extra point given to the EU CPI in terms of broad market impact across all assets. Really wouldn't expect too much from that one. Maybe a 15-minute, slight volatility bar. Nothing more, nothing less. So I wouldn't be looking to trade that one or anything. It's, it's just scraped through on the registration. FOMC, however, still an 8 out of 10 in terms of broad market impact. That's pretty big. So we could definitely see a bit of a shake-up there. Don't forget that we've got Walsh now and not Powell as chair of the FOMC. And so therefore, we are going to have to, take that with a level of seriousness as well, because we really don't know much about this guy. We know that he's significantly less experienced than Chair Powell, and we also know that he was placed there by Donald Trump. So if anything that Donald Trump's done in the past is anything to go by, oh boy, that's what I can say about that one. As we move down into the money flow trends, again, no real notable call-outs. 53% on indices. Fixed income markets remain stable. Commodities, 52.74%. I can't remember what last week's was, but I think that's slightly above. Slightly more, yeah, slight more bid in commodities this week. But again, I would put that down almost entirely to natural gas and maybe the oil markets. But oil was off to a minus 1.4% start this week versus natural gas is plus 4%. So not entirely sure where that really comes from, what it entails. Remember as well, guys, that the total liquidity is pending limit and market orders. So that is liquidity at market, ready to go. So yeah, it might not be triggered yet. As we move down into the equity side of things this week, and FYI, for those of you who are UTC traders and you're with me day to day, and on the Wednesday equity masterclass sessions with me, don't forget there is homework. And I will also say that some of you guys out there have been very good with getting the works back. Some of you, not so much. I'm not going to pull out any names, but I know not everybody has got stuck into the equity stuff. Remember, it's not being done for my benefit. It's being done for yours. And if you were to go anywhere and look to purchase something like it, you would be spending thousands on the content. So rest assured, it's definitely worth your while to get it back, because I am looking at it, I am reviewing the work, and I am providing feedback ongoing. So definitely worth doing. So get stuck into that if you haven't done so already. Make the most of it whilst it's there. Moving on down, then we've got VTLE, APLD, STRL, and AMR this week. I would leave APLD. I've actually decided that's probably not too much of a discount at the moment. It's a little bit, I don't know, it's in the middle of a decent price and not a decent price. So yeah, probably leave that one alone. VTLE and AMR though, both of these are standout and definitely worth a look. And the equity of the week is Kratos again. Decided to leave this in. It's just looking awesome at the moment. The financials are definitely there, and we're definitely looking at some real long-term, high-growth expansion opportunities. So that's definitely worth taking the equity of the week place yet again. And then finally, looking at institutional buying interest by sector, defense, yet again, a further 3.6 bills over the weekend have come in. AI computing at 2.9 billion is an interesting one as well. Energy is not energy storage. That's just energy in fossil fuels, so oil, natural gas, and so on and so forth. That's this one. So that's had a hell of a lot of interest over the weekend. And then we've got hard assets in industrials. So that's going to be your JVC and whatever the other one's called. Do you know what, guys? I cannot remember for the life of me what the other one's called. But anyway, hard asset industrials, which might be worth your time, worth a look. So, the most exciting part of the report, disclaimer. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. So please take the time to read the disclaimer, and you can check out more on that on our T's and C's. Thank you very much. So with that out of the way, let's get stuck into our charts this afternoon, see what we've got going on from the market report, and also what we've got going on with regards to the US trading session this afternoon as well. So first of all, we'll start off with natural gas. Natural gas at the moment currently trading at 298. It has had a little bit of a spike up and down again. If you want to know why, it's because it's the commodity market open at 130, which is exactly what we've seen here. So we had a fake out upon the open, took out the high, and then back down again. There's traps in the retail longs, takes their stop losses, and then we get on with the normal commercial route. I would like to think, like I've already said, that the market will be on course to come back down, hit liquidity, and boom, we get the takeoff from that point on. That's what I'd really like to see. So what we can do, we can't really set up any orders at the moment, but what we can do is we can set up alarms. So I'm going to set my alarm personally at around 292. just to let me know when we're getting to the beginning of the gap. If we can then crush the gap, come back down to fill the gap, we also at the same time get 2 birds in 1 stone, because we get back into the discount area, and then we can ride the discount to premium wave, which would be great. If it doesn't go that way, then we'll have to wake up tomorrow and come up with another plan. But that's what I'm looking at this moment in time. Next up, going down to silver. We're off to a pretty good start on this one. Still looking at a real nice continuation. As it happens, team, we are actually coming incredibly close to the weekly entry on this one. So I, in my mind's eye, had this as the level that I wanted to consider. Now, look, we're not looking for anything significant here, to be honest. We're looking at a relatively short intraday trade, first of all. But it's a really nice little position, nevertheless. So I'd be looking at a target profit up there at around 83.78. And the stop loss for this one would be about there. And that's going to yield you guys around a 1 to 2.45. So I think that looks really good, well balanced. And we can be ready to shove that one out the door. Yeah, definitely ready to shove that one out the door. Yeah, so that looks really, really good. NZDCAD as well. Not really focusing too much on the rest of the... damn it. A little bit too slow. Yeah, a little bit too slow. Mondays, man. Mondays. It's already trading at 80.75, which means we've covered the majority of the weekly idea before the weeks really kicked off. Excuse me. Well, credit where credit's due. It was a good call, and it's certainly looking like a fantastic opportunity. But unfortunately, team, it does look like that's going to be one of those that gets away. Amazing, the level of commercial imbalance down there. Really, really amazing. Let's have a look at that on the daily time frame. Let's unscrunch the charts here. Yeah, that's one hell of a commercial buyback. Wow. So what's happening here, I'll give you a little lesson, as we're currently here anyway, and it's a good time to do so. Really, really nice imbalance. Okay, this is a huge imbalance bar. Big commercial sell point. We've come from the premium with imbalance down to the discount. Once we've come down to this area, we've now got a really nice buyback happening. You can see we've reached this low. The market's literally bounced aggressively away from this area. This is because the market's coming to fill the imbalance, run back up to get the premium, which is the premium price up at the top there, and then we will continue trading lower. The trade lower will look more like this. More staggered, more slow, more controlled than it will do the first time it happened. So that's what my theory would be here. It is unfortunate that we're not going to be able to get in on this one unless we have some catastrophic event that takes place and the NC, for whatever reason, trades back down to 80.25. And that is going to be a bit of a shame. But there you go. What can we do? Nothing we can do on that one. What I am going to do is set up an alarm at 81 just to let me know so that I don't waste any time in being able to take a short rejection trade from that area. The entry for this one will be a break underneath the trend's median at around maybe 80.90, and then we can ride the run all the way back down to 80.25, and that will be a really impressive trade. But for the time being, we're going to have to sit on our hands. And finally, the UK FTSE, which is also taking off. Bloody hell. Let's go up here to the daily time frame. Oh, that's really annoying. Yeah, that's really annoying. So, I mean, to be fair, the only reason I haven't gotten around to doing this is because I have been absolutely rammed, as I usually am on a Monday morning. My Monday mornings are carnage. But you guys did have... and I'm going to throw you all under the bus now, in a nice way, in a light-hearted way. But you had the report released and ready to go at 10 to 10 this morning, and at 10 to 10 this morning, we were there. 10 to 10 candle was there. So that, my wonderful trading team is a very, very nice break of structure. Very nice indeed. That is the break of structure. It's the only break of structure there is to take that trade. So I have an excuse. If you've been working this morning, you didn't get around to the charts, then you've got to get out of jail free card as well. I'll give you that one. But if not, then that was a great opportunity. that was a good one. UK FTSE has basically covered 50% of the weekly trade idea now. It has escaped my fingers, unfortunately, my grasp. And we're going to have to wait and see if the damn thing comes down, aren't we? That's the only thing I can do. So possible entry points for late entry opportunity is about there. I don't want to be taking the trade anywhere near where it's trading at the moment. But if the alarm bells, then I will go back to it. Just looking at that NZDCAD trade. When was 10 to 10 this morning on that one as well? 10 to 10, 9:45 candle. That was there. So that was a little bit, that wasn't quite as good. That wasn't quite as good. The 9:45, 15-minute candle, 10 to 10 would have been there. That's pretty high up already. I mean, in order to get this one, you know, we probably would have been about there. And yeah, that was about 8:15, 8:30, I suppose. I was anticipating a price action pullback, but the damn thing's just rocketed up, hasn't it? So yeah, it's having a good time. Had a good time today. That's okay though. Plenty more fish in the sea, and we can see what the rest of the week brings us. It's been pretty good to start, I suppose. So maybe we can see a continuation of that. Now, the rest of the markets are all having a bit of a ping at the moment. As you can see, we've had some quite nice volume from around 12:30. We've got decent numbers, especially in the European markets. The US is trailing behind, but still not too bad. In terms of a setup for this afternoon, then, let's start getting stuck into that and working out a bit of a trading plan. So we've had big liquidity pushes here in all of the US trading assets. I would say that one there is the most recent point of liquidity. We've got the break above coming back down for a hopeful retest. Well, we can say straight away, is that going to be a problem for us? Yes, that is going to be a problem for us, unfortunately. We've got some real big areas of cash around here. Even that area in there is one, and that puts that directly underneath the current zone that we're at. And then, of course, we've got this annoying low here, which had a really big commercial move thereafter. So we know there's money there, which means that we can't take the trade until we get the path of least resistance, which is all the way down here at around 273, sorry. Yeah, so we're not going to be able to take shorts on the Dow Jones today. That is that in a nutshell, which is fine. That's what we do. We go through the filtering process. There's not always going to be opportunities on both sides of the market. The long, however, is available. And if we have liquidity about there, we drag that one across. We've got a good, strong trading margin, as seen from previous price, between these 2 points in time. So what we're going to be aiming for is the break, close, and retest, of which we already have 2 steps of that process achieved, down to this area in here, and then the continuation thereafter. So then hopefully we will see the push from here, target profit up there, and then you guys can have your stop losses at approximately 49.46 for a 1 to 2.67 trade. Very, very nice indeed. Next up, we got the NAS 100. NAS 100 again had a nice little push today. Some sound trading margins. I think there may be some better availability for shorts than the Dow Jones on this one as well. We have the high up there. Great structure. Perfect point of inflection. Break, close, retest. Secondary retest. We then break underneath. Get the 2 bullish retests here as well before we get the commercial move away. Very nice point indeed. Market's coming up there now. If we look back in time, we've got high 1, high 2. Drag a zone across the top of there. And now we've built ourselves a trading margin. Break a structure for this one. We go back in time. We look for any key areas here. Probably, I would say, around there. As a potential for a key area. Clear away some of these highs. Drag that across to the right-hand side. Go down to the 1 minute time frame. We can see that the market's building up in here between big point of liquidity and the breaker structure area. So we know there's stuff going on. Entry for this one is going to be about there. Target profit down here. And the stop loss for this trade idea probably about there. Really, you want to make sure the stop's above the floor. That's the floor here. So then the stop loss at this level is a really nice margin above the floor. It's a 1 to 2.5. Perfect little trade. Absolutely perfect. But remember, that is post US Open only. Cannot be taken in the pre-market. Download. Next up, we've got the S&P 500. Back up to the anchor chart. So we have range ceiling about there. Obviously, we've already recycled this zone. That can be reused down here. Let's just put another zone in there just to clarify where the true area that we want to target is. So this one, we've got split opportunities. Let's go to the 1 minute time frame. So the breaker structure for the short will be approximately here. Right? Drag that across the right hand side. So what we're going to say here, ladies and gents, we've got 2 opportunities. The first is for the continuation to premium and then trade to discount. The second is trade to discount and then trade up to premium. 2 trades, 1 margin. Short entry, target, and stop loss. And then we've got the long trade, entry, target, and stop loss. One's a 2 to 2.59, one's a 2.86. Okay, let me zoom in on that, make it nice and clear. Download. Okay, so 1, 2, and 3 already locked in, loaded, and built out, ready to go. Natural gas, we're well aware of what we're waiting for here. Sit on our hands time. We didn't actually cover UK Brent, did we? This is last week's short. I didn't actually get rid of it. It's still in my broker terminal, so I'm going to leave that there, guys. If you haven't got the UK Brent trade, that looks a little bit skewed. Have that there. If you haven't got the Brent trade in, or you removed it on Friday afternoon, please feel free to replace it. It still looks good. It really does. It still looks absolutely fine. So I'm going to leave that short in there for the time being. We've then got silver, which our trade idea is locked and loaded, ready to go. So that's looking quite nice. In terms of what gold's doing at the moment, we've got the available margin. This one's already triggered if it was a trade idea that I'd listed. I mean, it has been previously is what I'm saying, but we don't have a fresh one in there. And at the moment, I don't want to take both. So please sit out of the gold one and just focus on the silver for the time being. Yeah, I think that's pretty much a wrap there, team. I'm feeling quite optimistic about this afternoon. I think it's got legs. Let's keep our fingers crossed. I'm feeling pretty optimistic about the week overall as well. And we just gotta stay hopeful that Trump doesn't go and do anything ridiculous, which is a Hail Mary most of the time at the moment, isn't it? But let's see what the week can bring. Let's see what the day can bring. Get us off to a good start, and I think we'll be all right. Are there any questions or anything, team? Anything else that you want me to check out before we get stuck into it? All good, Tony Tone. Good man. Good man. Yep, you are most welcome, my friend. No problem at all. All good, Cora Tim. Yep. Well done. No problem at all, Matthew. You are more than welcome, buddy. No problem. All right, guys. Well, listen, I will call it there then. Have a fantastic afternoon. Good luck out there. And remember, I will catch up with you tomorrow morning, bright and early for the European session as well. Doors are always open. I will be here. So if you've got anything you want to catch up on or ideas or anything like that, or you just want me to do post-trade reviews of things that you've got going on just to see if you're on the right lines or you're getting the process right, please feel free. Okay? So take care. Good luck. Trade safe. And I'll see you then. Thanks, guys. Bye-bye.